One of our investment themes is that home buddies need more content. Verizon will be the backbone of that through mobility, 5G, and delivering all the content into everyone's home. So we want to link up with various companies that will basically serve the home buddies. In terms of Walmart, we see three great names to own in the retailing space, and they're both online and box. So it would be Amazon, Walmart, and Costco. And basically, we wanted to add to our position in Walmart to round out the exposure in that retail space.
The stocks you've sold are ADP, CVS, Chevron, Gilead, and Kraft Heinz. Tell me about the standouts for you there, why you bailed on those. So oil, we think, is just not going to happen. And we're oversupplied. There'll be consolidation in the industry. And we wanted to get out of that industry group. We sold some banks. And part of that was to move more into a theme of cash money to e-money, meaning that going forward in a post-COVID world, we want to be linked to the merchant acquirers, the payment processors, and the backbone of that e-payment system. So we added Visa, Fidelity, Financial, and we think that moving from the traditional bank model to an e-payment model is going to be adopted in a post-COVID environment. It's interesting, though. So, I mean, if rates go up, you don't think the bank trade's going to work at all?
We're not worried about rates going higher. So I wanted to ask Mike the question. Look, there's $17 trillion worth of negative debt around the world. And our recovery is, in our view, slower than anticipated. There will be a lot of bankruptcies and foreclosures going forward. The take-up in employment gains is slower than anticipated. So we don't see inflation returning, nor do we see rates moving higher. So I think there's time on owning the banks, which, by the way, put up some good numbers this last week.
Yeah, but when rates are where they are, you can see why, even with those good numbers, that the bank stocks don't do anything. Joe, you sold Eli Lilly. Why did you do that?
I did. I did, and I think for everyone on the panel today, you know what I'm about to speak of when I say I was angry in doing it. I wanted this trade to work so badly. Scott, it's a name that I've held on to for quite some time, but I had an Ask Halftime question just 2 weeks ago about this, and I mentioned this was the area that risk management takes over. The story becomes complicated on the quality control issues at the New Jersey plant. The stock, which was 170 in July, has now broken below its 200-day moving average. I do not turn winning trades into losing trades. That's a recipe for portfolio failure, and that's the reason why I angrily sold this stock today.
Well, I mean, you can't have a book that says buy high and sell higher if you do what you just said you didn't want to do, right? I mean,
exactly. But sometimes you get a little emotional about it. I wanted this to work.
Yeah, I hear you. I hear you. Carrie, no moves for you? No new buys?
Well, we had a spin. So we had bought Fortive, which is an industrial instrumentation company, and it spun out Fortive. So Vontier is a new name for us. But no, we haven't bought anything. The last things we had done were, we trimmed a little Twilio, a little while ago, and then we bought United Healthcare and Fortive. And those are more defensive names, but they've been working.
But you just painted a whole...
We don't trade a lot.
You painted a whole rosy scenario for Mike Wilson about this broadening out rally, right? Couldn't these things work, but you're not putting much money behind that?
Well, we're pretty fully invested. We stay fully invested all the time. Our portfolio is very growthy, and we've made very, very good gains this year with names like PayPal and Facebook, Apple, et cetera, some of the smaller names like S&P Global and Sherwin-Williams. But you have to, at some point, sell some of those gains, and we look to other places where we could redeploy the money that hadn't moved very much in industrials and United Healthcare. That's That's a great name that had been beaten down because of concerns about a Democratic sweep and probably too much. And so it was a name to sort of show up on our screens, and we decided to buy it. But I also think that the growth trade is going to continue to work. I don't think it's not going to work.
Carrie,
I just think you have to be careful.
Forgive me for
with price.
interrupting you. I'm going to do it, though.
I just think you have to be careful.
Forgive me for
with
interrupting
price.
you. I'm going to do it, though. I just want to call your attention to the fact that stocks look like they're having a stimulus deal before the election. So there was some suggestion that maybe you could strike some kind of a deal over the next 48 hours. All it seemed to be a bit of a rolling timeline on that. Larry Kudlow, the president's top economic advisor, in an interview earlier on our network, said it was a positive morning, an optimistic morning, he said, and that things were moving in a favorable direction. Stocks seem to be moving in a favorable direction, at least for this moment. Carrie, forgive me for interrupting you on that. I just wanted to get that news out. Finish your thought, if you could. This plays right into the whole conversation about where stocks could go and how stimulus plays a role in either direction of that.
Yeah, well, I was just saying that we still believe in the growth trade, and whether it's a low interest rate environment, even if rates come up somewhat, people are still paying for growth, and the market isn't going to go higher unless the big growth names participate. But as they get more expensive, you have to make portfolio decisions, and a broader market means that there will be more companies and industries that participate in that trade.